following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the German DAX today, folks. For those of you that like activity, this is where you want to be. This is where the Duke brothers, they would play in this pit because this is really a good one. If you'll notice, the first chart that we posted here is a 30-minute chart. You'll see that there's a Gartley forming. Now, I'm just going to walk you through what the DAX did today, because we're having no volatility at all in the S&P 500. You should take a look at this one because this is the big daddy rabbit. This is the one that swings the big stick in the financial markets across the pond. So you might want to look at this one. Anyway, if we take a look at this on a 5-minute chart, you'll notice that we had that 3 drive to a bottom pattern down there on the 17th. Beautiful ABCD, perfect 3 drive pattern. The market rallied up, as you can see, to guess what? A perfect 61% retracement of the high on the 17th, down to a perfect 61% low on the 18th, and up to a 78% retracement to the low from yesterday, and then down to a 61% retracement on the other side. Now, you're starting to get the picture here, I think, because these things seem to be following pretty nicely all the way through here. If we go along a little bit farther, and I didn't make this up, folks, this is actually what's going on today. You'll see what happened. We went up to an exact 61% retracement right after the opening today, up at that 106.30 level. You'll see that you also had a 1.618 expansion of the swing from the 786 to the 618. And then what did you do? You went all the way down. Today's low was, what was it? It was exactly a 1.618 expansion of the swing from yesterday. And that's what's happened. And we'll just keep following along here just to see how we're doing with this, through the rest of the morning. And you'll see that this thing just is, it's almost like reading Morse code, and you don't have to know Mr. Morse himself. As you'll notice, after that 1.618 expansion was found, what did the market do? It went right up to a 0.618 expansion or retracement to the downside. And then these are all very big swings, folks. When you look at the low at the 1.618 at roughly 10,500, and then go 10,800, that's over a $2,000 move. We haven't seen a 40-point move in the S&P since Hector was a pup, and he's about 13 years old now. So that's a big move. So you want to remember that these things, really move quite nicely when they do move, and they follow the numbers, just like anything that's really active and very heavily traded. You're going to see these numbers pop up all the time, and they're not perfect. That's for sure. They just aren't. So you just got to remember that that's the way it happens. I wanted to do something else along that same line because we've got a bunch of things happening today, being Friday. We hit all those 1.618 and 1.27 expansion numbers on the stock market on Monday. This is, unless we make a huge reversal today, this is going to be a down week after that has occurred, so we want to pay pretty much a close attention to it. Now, I wanted to just walk you through the same type of scenario here using a intraday chart on the gold market, and you'll see here that we've had some really wild times after the Fed. We talked about this yesterday, and now you notice that we had a number coming in here. You'll notice it's that same type of trend line that we had in the DAX at 1349, and breaking that, of course, would mean that your market is going to go down a lot lower. So what I do during the evening is especially when I'm watching these things overnight, I watch to see how the market, reacts. And if you'll see here on the next sequence here, from what we just looked at, you'll notice after that low was made at 1350, the market rallied up to a perfect 61% retracement up there at 1356. That gives it another, lower low at that time. Well, when that market rallies like that, the first thing I'm going to do is I'm going to take a look at its sister, the poor man's gold, which is silver, and I would put it up here just to see what's happening, if it's doing exactly the same thing. And as you can see, that is in fact what happened. When gold made the 1355, silver rallied up to 1970. Well, silver is trading at, as we posted earlier in this room, silver is trading at about 1930 in the room right now, making a very large, ABCD pattern. And if we break below that, then we're looking at a really serious correction to the downside, which I think we're going to see, because I believe we've got a chance to see gold at that 1275 level. That's what we're looking at. But anything below 1910 today in silver certainly sets up that $18 per ounce level that we're looking at in silver over the next few weeks. So we'll keep our eye on that one as we walk through the day. The reason why I'm going through these types of early intraday charts and stuff is how you build a case for doing this. Now, I'm going to be doing a webinar on the 25th of August for TFNN. The title of it is, looking at the masters, the books of the old masters. This is how I learned this stuff, through my good friend Don Mack and also my good friend John Hill from Futures Truth. We're going to be going through some of these different patterns and some of the ideas that they had, looking as far as the proper use of stops and how you do mental preparation. How do you, they didn't worry about these major market reports, back in the 20s and 30s and 40s, but we need to understand how to handle trading into major market reports. You want to force yourself to trade with the trend if you can, and that's another good thing that we're going to try to cover, during the thing. We're also going to talk about how to increase your odds by about 85% on some of these patterns that we look at. So these are some of the things that we're going to cover in the 1-hour webinar on August 25th for TFNN. So we'll watch that as we get ready for it next week. I'll be preparing for it this weekend without further ado. Okay, now I wanted to just give you an idea. Since we were talking about gold, I wanted to show you a correlation here that is really quite amazing. I'm going to show it to you two ways. I'm going to show it to you just by using the charting package that I use, which is Ensign. The red line is the dollar versus the yen. As you can see, the correlation here is about 90%. Now, if we go and look at our good friend Tom McClellan over at McClellan Oscillator, and we're going to have Tom on as a guest here very, very soon, you'll notice that he's gone back a little bit longer here, back to 2006, and as you can see that correlation is really quite amazing. And as you'll notice there, in 2013, early in 2013, that was the start of Abnionics, where they're, putting all the money and stuff. So we'll see. Anyway, we'll take a little break here. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to show the picture of the yen versus the Treasury bonds. This is also from McClellan Oscillator, Tom McClellan. And as you'll be able to see here, there's something very unusual happening. Since the end of July, you'll notice that the yen has continued to move, but we've had a major divergence now in the Treasury bonds. This could be the fact that maybe, what's been happening in Japan, they realize that it's basically, having a back shirt pocket or having a shirt on your back side of your shirt, a pocket on the back side of your shirt, which is pretty much worthless back there. It makes it seem that maybe that's what's going on over there, and that could be something really dramatic. For the first time, there was a man named Singer. I don't know who he was with on CNBC today, talking about the bond bubble, and he was also joined by Carl Icahn, who was also talking about it. Paul Singer, yes, that was his name. And they are also talking about that this is, if you stop and think of it, folks, negative interest rates has got to be the, that's just insane. I mean, give me a break. You wouldn't even, well, you never let your children borrow money from you. You just give them to you. By the way, folks, this is a very, very happy day for me. This was the happiest day of my life, August the 19th. 49 years ago, I have a little baby girl, and she's 49 today, and it's also Clinton's birthday, but he comes in second to her and everybody else. Anyway, today's her birthday, so if you wanted to send her a really nice gift, let me know, and I'll tell you where to wire the funds. Okay, let's move on to the next one. I was just as happy when my second one was born a year later, but the first one was, that's a shock. Okay, let's move on. I'd like to talk a little bit about the currencies, because we have something really big happening, folks. This is where the pedal meets the metal here, because we've been talking about this U.S. dollar index for quite some time now. And last night, this is what's happened. I'm going to try to walk you through this, because this is what I go through in my thought process. You'll notice here, back on the around the 20th of July, we were looking, you wouldn't believe it, folks, but right outside the window here is a very large white egret looking for some shrimp from the little grandsons here. So they're getting the shrimp ready for him. And he's just looking through the window, tapping on the window, letting us know that he's here. Maybe he wants to trade. Do you want to buy or sell? Oh, he's standing aside today. Anyway, if you'll notice up there, we had 5 major ratios coming together. 3 at 127, 1.618, 1.618, 786, and also 61.8 going way back, to early January of this year. But with 5 ratios coming in at the same price, it's very important. But we did come down, and we made a perfect 78% retracement. Now, folks, look at that 135 pattern that goes back to last May. That's a natural trend line. It sets up perfectly. You have a perfect Gartley pattern, just like you did back in June. This is where the dollar index should hold. And since the dollar index is 53% of the euro should be the one that is getting ready, to turn over. And so what we'll do here is we'll take a quick look at the euro last night, because when the dollar index was hitting that level, you'll notice that the euro hit that 113.50 level. We're now trading down around 113.20, down about 50 pips from the high, but it's still turned around. If we take a look at the British pound, we're going to see the same situation here. We'll just put this up so you can see the British pound, and you'll be able to look at it right here. That it came in at 131.80. We've already broken 120 pips on the British pound. It's come off 120 pips from its high. I'll show you what it looks like about an hour or so ago, but it's already moved down, a little bit lower than that also. So we'll sort of keep an eye on what's going on. Happy birthday, JB. I think it's wonderful that you have a wonderful birthday, the same as my little girl, Jilly. Okay, I used to stay up the first night when she was at Sisters Hospital in Santa Maria, California. I stayed up the whole night in the nursery. There was only one other baby that was born at that time. And the doctor happened to be a good family friend, so I was able to stay there. And she basically slept in my arms the whole night, and I still remember it just like it was yesterday. I had a Polaroid camera, and I would take pictures of her every Monday morning. I kept pictures of her. Yeah, well, I took them on Tuesday, Wednesday, Thursday, and Friday, but Monday was the special story. Someone asked me a question about why I have an affinity to the Beach Boys. I was able to meet some of those guys and hang around with them a bit. And I still know 3 of them relatively well, but my good friend Jay Crosp was a very good friend of Brian Johnson, and also Mike Love. And in 1986, they asked Jay and I and Rich Anderson to look at a cattle feeding operation up in South Dakota. So we went up to this little ranch up in South Dakota in their private plane, their nice jet, and we spent 4 days going over that operation. And they wanted to know whether they should buy it, and boy, it was a flat-out steal. It just was really a wonderful buy, but the manager that they had at the time didn't want to have anything to do with the cattle market, and it was the wrong decision to make, because it really was a tremendous, really amazing move here. So we'll see what happens. Yes, there was a lot of strong support down there, as you can see in that silver that we posted there. We got down as low as 1922. That was the D point of the ABCD, and we rallied about 20 cents off the bottom, and that's all that is really right now. But that is a big ABCD. So if the market's going to resume its uptrend, this is where it would come from. Let's just put this up here so you can see. We did this before the market opened, and I'll show you what it's like. The unusual part of this is, folks, I have an order to buy it at 1921. The low was 1922. So I have to go to the law firm of Dewey, Cheatham, and Howe to see how I get that thing taken care of. So I missed that one. You know, it's just one of those things that someday it's chicken salad and someday it's chicken soup. You just never know. You just have to depend on what you're looking at. Anyway, that's what we're watching here in some of these things, but we'll see what's happened. We did get a, small rally of $4 in the gold market, really, not meaning very much. If you wanted to do something today, folks, the one that looks the most interesting to me would be the sale of the crude oil, because that was the one I lost on yesterday, and I did lose my 70 pips on that. I got some of that back last night, but we've had a rally back now right up to the 61% retracement here at the 48.50 level. So I think that's a pretty good sign. The reason why I'm doing that is I'm going to show you the next chart, since we're talking about the currencies, and this is because all this is related to money. But if we take a look at, shucks, it's the wrong one. Doggone it. Give me a break here. Well, I'll do this one and then I'll find the other one. Hold on just a second. I know I got it here somewhere. So,
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're taking a look at this Canadian dollar because it has such a high correlation with the oil. In other words, if this is bottoming, oil should be topping. As you can see, if you look at those purple lines, the one that was back from May to June, and you look at the one that we have now, you're basically looking at an equal move. We're also setting right at the 61% retracement. I posted this last night, and as you can see, we've already rallied over 100 pips, which is $1,000, off of the bottom. So this should be a pretty significant bottom here in the Canadian dollar. And if this is correct, that means that we should, because the correlation is extremely high between the Canadian dollar and the crude oil, that we should be topping, in the crude oil at that particular point. So remember, this is just a situation where you're looking at a spot where you've got a pattern coming in with some nice ratios. Whether that's going to continue or not, we're never sure. It's all we can look at. Someone's asked a question to take a look at cattle, and I will certainly do that. It'll take me a second to get the chart, so I will sit here and move my lips up and down to try to make something interesting happening before I get the chart ready. And if you'll give me 1 second, 5, 4, 3. Oh, this is set up so beautifully. This is exactly what we would expected. In fact, we talked about this just the other day. We're having a really nice retracement here, and this is exactly what we want to see happening. And your chart's going to be coming in about 5, 4, 12, 3, 2, 1. Here comes your chart for the cattle. As you can see, we had that reversal bar back on the 25th. We had Rich on that day. We had the rally all the way up. You'll notice that 78% retracement. We hit that thing just spot on at 116.30 in the cattle. And now we're pulling down to near this 61% retracement. Now, if you'll notice at the top of this chart here, it says look for an ABC into the gap at 618. And that's what we have right now, is you're only a half a point away from the 61% retracement. So we want to keep an eye on that today and tomorrow. But with this long bar that we had yesterday being down 2.5 cents, it's probably best to not do anything in this till about Monday, because you could easily get down to the 786. And if this thing is really bearish, that could be a C leg that you looked at back here in early August, and you could be heading down to $1 in cattle. We'll have Rich on hopefully next week. On Monday, we have a very special guest. We have Shane Smolian from wolftrader.net will be our guest, and so he'll have some really good things to talk to us about. But, as you mentioned, we mentioned on Monday that he had a sell signal in stocks at the beginning of the week, as did our good friend Norm Winsky from Astro Trends, and they've certainly been correct. I mean, the market's been down almost. We've had a few up days, but most of the days have been down in the market, other than the day when we had the Fed rally. But all those expansion numbers that we talked about on Monday, the 1.618 and 1.27 on the DAX, the NASDAQ, the S&P, the Dow Jones, New York Stock Exchange Index, all of those numbers were hit, spot on, perfect. So you have to pay, really close, attention to that, because these are the numbers, that we live by and also die by when we're wrong. But, that's just the way it goes. Some days you have winners, some days you have losers, and you have to do them all, folks, because you don't know which trades are going to be the winners, and you don't know which trades are going to be the losers. The only thing you can do is to protect yourself by using the only thing in the risk-reward equation that you can control, and that is the risk part. We never know what the reward part is going to be, so we must focus on how much money we are going to lose, not how much money we're going to win. That's a market adage that goes way back to Bernard Baruch when he wrote his autobiography, My Own Story, when he said, don't be concerned on the return on your money, be concerned on the return of your money. And therein lies the problem that we have in the market today, in the bond market, because that's where the real problem lies, folks. It's not in stocks, it's in the bond market. And we see that, in the utility index that we've looked at, over the past few weeks. So we've had some type of a major top that it also, made that 1.618 expansion on the weekly and is sold off for 3.5 weeks. We did have a little bit of a rally yesterday, but that's, all that it was just a little rally, at least from the perspective of, what we're seeing today. Now, I've been asked to bring up a chart of the FTSE, which is the the UK market. And basically, they had some really good news out today, and yet the market was still, selling off. But we had almost a double top in this one. But remember, folks, this just goes back to April of 2014. The high on this thing is way back at around 7,300, I believe. Right around 7,300. So we're just making a 61% retracement in this long-term market, just like we're doing in the emerging markets, just like we're doing in the Hang Seng. All of those, be able to take a look at it. I've been asked to bring up the Nikkei, and if you'll give me a second here, I will be happy to do that. It only takes me just a little bit to do it. There we go. We got that in right there. And we'll be there in just 1 second, Mr. Z, so just be patient. I've got this set up now that it actually works a little bit better and makes it a whole lot easier for the old cowboy to get some of these things out here. And then once I get them, I'm able to see it. And I've talked here for 10 seconds, and so we're ready. And here is the Nikkei. And as you can see, we hit that 61% retracement like we did in July. We hit it again, and we're also heading down. This is a very, very bearish chart, folks, because this thing goes back, the high was made on December 31st, 1989. This is a 37 years ago. That's a long time. So this has been in a bear market for a long time, and what they're trying to do to inflate this thing is not working, and yet they keep trying it. So that's not a good thing. Not a good thing either. Someone's asked a question about the dollar yen. We're trading at around 100 right now, and anything below that is setting up an area between 95 and 92. Remember, about 4 years ago, 2014, 2013, Tom O'Brien was talking about King Dollar when the dollar was 75. The yen was trading at about the same thing. The yen went, of course, to 126 and change. So for it to pull back to 90 is nothing more than a 61% retracement. So those are, this is still, long-term bear market, but short-term, it's a bearish market. There's just no question about it. We're making lower highs, as we go. So that's one of the things we want to keep on, because right now we're trading at 100.15. In the yen. We've been down as low as 99.30. So with this being a Friday, my assumption is we're probably not going to do a whole lot from this level. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're going to take a look here at this Japanese yen. We were just talking about it. This is the weekly chart. As you can see, going back to 1995, I put in the 20-man line there, which basically is acts like a fulcrum. You have to have 3 hits. We hit one in 2004. We hit another one in 2008, and again in last year, 2015. But you'll notice the next support here is around 95, and we've already talked about the relationship between the Japanese yen and the gold. And if we take a look at this chart that we posted a little bit earlier, you'll see that the correlation here is extremely high. So the next thing we want to do is we want to take that same chart that we were looking at and put it in to a context so you can see the yen over the dollar, and you'll be able to see that there is a correlation here. You have to trade each one of them separately, but you see there's something going on between the dollar and the yen. So it's very important to watch this. But we're only 5 handles away. That's not very much, because in the past 2 weeks we broke more than 6 handles. So it can do that very, very quick to get down to that 95 level. Now, hey, maybe it doesn't stop there. I don't know, but that would really be an important spot to look at it from the long side if we do get there. But right now we're trading at 100. And so we have about 5 more points to go to make that. That would set up potentially that place in gold that we'd like to be a buyer, which would be at around the 1275 level if we are able to get to that level. But, you know, we're really to see what happens, and we'll see, you know, what goes on with this through the rest of the time. But anyway, that's neither here nor there. We'll keep moving on as we keep looking at some more of these charts that we've taken a look at here this morning. We want to take a look at the XAU also, because this is the weekly chart of the gold-silver index. This is a chart going back a very, very long way, and you'll notice, excuse me, you'll notice that we had a 50% retracement from the high in 2012, and we made a 38% retracement from the high in 2011 when we hit $1,932 an ounce in the gold. You'll notice that we made the 3 drive to a bottom pattern down there in December. That was after a 12-week rally. Then we dropped for almost a year before we finally bottomed in January, and then we had this huge rally. So a pullback here would be well received and give a chance for the latecomers maybe to get in. There's a possibility that maybe that was it, in the gold market. We'll know more if we get down below that 1275 level, but right now, that's really what we're looking at from this point of view. I've been asked to put a chart in that was in the newsletter this week. It was the first one that I put in, which is basically a long-term chart going back to August of 1932. Let's try it again. It goes back to October of 1974. That's when the bottom came in. The real big bottom that really meant a great deal cyclically, folk, was August the 9th of 1982. That was a 61% retracement off of the low from October of 1974. We had a perfect double bottom in October. We had a one in October, and then we had another one in December, and both of those were accompanied by the major planets going in retrograde motion. So you had conjunctions and oppositions coming in 2 or 3 months apart. That was one of the key things that we studied when we started looking at cycle behavior with the planets, and that's been continuing since that time, and it's a very good indicator of some major stuff that happens. It's certainly not perfect, but it gives you a pretty good idea. But with this particular chart, you're looking at a Fibonacci number of 34 years, and you're also looking at 89 months up from the low in March of 2009. So you have a Fibonacci number of 34, Fibonacci number of 89, and so that's two major numbers. But the main thing is, as you can see here, we have that ABCD pattern, and we also had the 1.618 expansion here on the weekly that we talked about on Monday. So that's really what we want to be watching. So keep an eye on that. Now, if you were able to sell the crude oil up there at that 48.50 level that we were talking about a little bit earlier, it's got a 50-cent profit in it right now. So what I would do is put your stop at break even and head for the St. John Bosco Society for praying, and get into the church with Sister Clotilde and do some heavy praying that you don't get stopped out. Because if you get really lucky today, and if you get really lucky, you could easily see 47.65, which on a 15-minute chart would be a perfect ABCD structure to the downside, and that would give you about a $900 profit versus a risk now of break even. Because if it gets back to where it was before at 48.50, it is certainly wrong. You don't want to mess with that one. So, but right now it's got a pretty good chance of getting down to that level of 47.65 or 47.40. 47.40 would be a 1.618 expansion, but being the cautious person that I am, I would certainly be looking at 47.60 to be to take profits in this. But no matter what, you should not let this thing go to a loss if you're in it. Remember, yesterday we tried it. It didn't work. Today it's working. That's the way it is. Some days you have chili in the soup. Other days you have beans. So you just have to wait and see. Now we're setting right now in the S&P, we're setting at the 2173 level. That's the 61% retracement from the low of the yesterday on the 18th. We've come down here very, very quickly, 6 points here in a matter of about 20 minutes. That tells us that we most probably want to go lower. There's going to be a really nice ABCD structure in this. Forgive me 1 second, I'll draw it in and post it so you'll be able to see it. You'll be able to see this ABCD structure come in on the 78% retracement down around 2171. That's coming here in about 10 seconds or so. Hopefully I'll be able to get it into the room here, and you'll be able to see it without too much trouble. And as I say that, it's never that easy. It's always as simple as it appears, but never as easy as it might be. So give me a second here. There we go. We got it right here, right there in the front lawn, just like we expected. And we'll put this in here, and you'll be able to see the ABCD structure there at the 2170 level. Now remember, these things, they're probabilities, folks. They're never 100%, and that's the key, to looking at these things. But when you have these long bars, you see we're already starting to extend down. We're only 1.5 points away from that number we're looking at with that long bar. That tells us that that 2170 is most probably going to be coming, and coming relatively soon would be, if I had to make a guess on anything, that's what I would be doing. So anyway, that's what we're looking at so far today. Well, we're going to have come up at a break here pretty soon. I'm going to be on Tom's show in about 25 minutes, giving a little brief description of the webinar that we're going to have on the 25th for Fibonacci 24/7. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the last chart that I posted into the room today comes from our good friend in Las Vegas, Thomas Beck. It's the Deutsche Bank. As you can see, it's gapped down again. That's 2 gaps in a row. They've made the news, of course, because the gentleman that blew the whistleblower was offered a $8 million prize for blowing the whistle, and he declined to take it. He said he would prefer to see some of the executives go to jail. Well, young man, I don't know what you've been having for breakfast, but God love you. You should have taken care of your family first and take the money, because it ain't going any place but to some politician's pocket, the way I look at it. But when they're giving money away like that, you should have taken it. I know you have some good morals and stuff, but You know, you should take care of your family first. You did a wonderful thing blowing the whistle. And to think that they're going to be, prosecuted, all he has to do is look across the pond and, look at J.P. Morgan, $19 billion in fine and not one day in jail. I mean, the way they stop that is they put him in jail. It's that simple. A poor guy down in Atlanta, Georgia, robs a 7-Eleven for some potato chips and a soft drink, and he gets 15 to 20 years. So, it's not right. But we need to get something like a Glass-Steagall Act back again. But I'm off my soapbox. That's it. No more. Keep in mind, folks, this Monday we hit 1.27, 1.618, 1.27, 1.618, and 1.618 expansions on the stock market indices. So that means something. We also had the lunar eclipse, which was yesterday with the full moon. That also means something. So unless the market reverses today, we're going to be in a down week. And that is going to be a possibility of the start of some type of a correction, maybe even something as bizarre as a 2-week correction in the stock market, if anything could be so absurd. But we'll keep a close eye, on that as we go through. As far as the gold and silver, silver did complete the ABCD down there at 1920. Gold is a little bit lower than that, but we'll see. Have a wonderful weekend. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.